Let's take a look at the recovery plan presented by a Swedish hotel company. This is very relevant to the tourism industry, hotels, airlines, that type of thing, as management here presents how they believe outlook will be. They take us back to look at the weak market that was, recovery, what actions have they taken to come out stronger from this pandemic, and also how is financing. Alright, so just the year that has been a very slow year, very low occupancy. We can see occupancy in February is expected to be around 18%. This means that more than 80% of the rooms are not rented out. This is terrible. These numbers cause hotels to bleed cash, as we will see later on in the report. And this is not something that's sustainable. We need a recovery. Also, RevPAR down 65% in Q4. Extra weak in capital cities. Capital cities are hit by reduction in business travel. Basically, non-existent intra-Nordic business travel. People don't do face-to-face meetings anymore. It's a lot of Zoom. That's at least the case for me and the friends that I have from university. We used to do business travel, not so much anymore. And we can see that outside the city, they have greater occupancy numbers. This is due to some internal tourism and Sweden being a bit open. You can go take a hike away from people. You can go skiing in the winter. Those type of things. They boost the numbers a bit. Alright, what did Scandic do during 2020? One of these actions was particularly important to me. But they protected cash flow, negotiated rents, they didn't pay any dividend, they froze projects, and they made sure to not invest anything in capex. This means no new assets on the balance sheet, no new investments, sort of. And also cost reductions, of course. They have the furlong, and when it comes to financing, they have taken out some traditional loans, but they also have made a new rights issue. And the new right issue is what made me invest, because the new right issue secured liquidity for 2020 as a whole. This made sure that they could stay in business, basically. It was a successful new right. And also negotiations with landlords. We will see more on that on the next slide. Dialogue with landlords, some rent reductions, rent rebates. And this is something that will continue on for years to come. Postponed openings, as they talked about earlier, no new capex investments. And Scandic, they also have a business model where they rent a lot of the properties, so the rent part. But this is a smart move, not opening new hotel locations right now. Alright, this is where it gets really interesting. This is the recovery plan presented by management to us, the broader market. Obviously, first half of the year, they talk about the importance of vaccinations and the infections of COVID going down, restrictions being eased, and they believe that occupancy rates will improve month by month. But H2, this is where the important part comes in this communication. And after this communications, the stock price of Scandic increased. I invested at about 30 and it stayed around those numbers for a long time until this report was presented to the market. Here in H2 they talk about, well, the first part, gradual market normalizations, fantastic, but the second part, intra-Nordic business travel. This is something that I will be able to watch like a hawk. If I see that for my own part, I can go and travel and meet customers again, and I see that my friends can do the same, then I know that intra-Nordic business travel has started to pick up pace again, and we can see increased rent out for hotel rooms in the capital regions in the Nordics as well. Just what management communicated. However, if business is continued to be done by Zoom and there's no news of business travel going back to what it used to, and we're closing up on H2 of the year, well, then I will sell my position in Scandic, because then they have communicated something to the market that's been priced in now that won't come to fruition, and then the stock price will be punished for this. So this is something I will stay on top of. Financials. Net sales decline 71% in Q4. It's been a bad year indeed. Let's look at some of the cash flows that's been. They have had governmental support, as we see. A lot of it, furlongs. Here is the cash flows. Alright, cash flow from operations for the full fiscal year. Minus about 2,000 currency units. And available liquidity at present, about 1,400 currency units. So, at the rate they're burning through cash, they won't sustain this current market environment for another full year. This is why we need a recovery. We need it to be quick, fast. Sure, they have the government support continued, but this is not a sustainable business environment to be operating a hotel chain in. And if more and more business is starting to be done via Zoom, these types of apps, then I believe this sector will be very sluggish for years to come. But if we see a return to sort of the new normal, then indeed there's a recovery case to be made here. Anyways, I will be on top of this situation and look out for business travel continuation, see if it returns to normal. And if it does earlier, I will buy more shares in Scandic, but if we do not see a return to normalization, then I will dump my position in this stock. Thank you for tuning in. I hope this helped you gain some insights on the sector, and invest safe. I hope you make a lot of money in 2021.